The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
I'm Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And today being Tuesday the 25th. Wow, I just got so confused with days. I started writing 26 on my newsletter for my opening call. And I got a telephone call just a little while ago saying, hey, are you talking over at MIT over at the Boston Investors Group tomorrow? You had said you would be. I didn't really forget about it. I just misplaced in my mind exactly June and July. Yes, tomorrow night, Wednesday, Boston Investors Group Wednesday meetup, June the 26th, building E51. 325 70 Memorial Drive, Cambridge. Where is that? That is between, I wrote it down somewhere here, I should remember it after all these years, between Wadsworth Street and Amherst Street. It's in the Sloan Building. It's around the corner, a lot of parking, shouldn't be a problem. And I'll be talking, it starts at 7 o'clock. I get a chunk of the evening since I'm the guest speaker, so I'll be on it from about 8 or 8:15 until the lights go off. So I'm looking forward to seeing you tomorrow night, Wednesday, June the 26th at 7 p.m. As I say, I'll be on it about an hour later. There'll be a very good speaker before that, Steve Carhart, president of he's a portfolio manager, and talking about fixed income, and that should be master limited partnerships, royalty trusts, real estate investment trusts, closed-end funds, and things like that. So looking forward to seeing you tomorrow night. Sorry to my apologize to my subscribers. I certainly would have had that down. I'll have it down tomorrow to have given you a more warning and more notice, but I'll be speaking tomorrow night. So let's go straight to the market. The Dow is up 124 at 14,784. The comp index is up 21 at 3342. S&P is up 12, actually up 14 right now, 1587. You've got gold down just 1 at 1275. Wow, that poor old gold. When you're out, you're out. It's like at a party, you know what I mean? You're out, you're out. Silver is up 8 cents at 19.58. Platinum's up 17 at 13.52. Copper's up 6 now at 308. Crude oil is at 95.55, up a few cents, and bonds are up. No, bonds are down 11 cents at 134.15. One of these days we will say bonds are up. Well, they're not right now. The dollar's up 27 cents at 82.90. Fascinating market, as always. Let's just talk about a couple of things. I've got a chart right now that I'm showing, and that is a chart of I call it my triple yield chart. I show my subscribers every single week. So it's a weekly chart. It has the 30, 10-year, and 5-year. 30 year is white. The gold is the... Let me just get this here so that I can see what you're seeing. Yep. And then you can see that the goldy color is the 10-year T-bond yield, and the 5-year is the cyan color. Look at this huge move. One of the biggest moves to the upside in the shortest period. Not the biggest move on the upside, just in the shortest period. Kind of like back in 2000 and what is that? 2009, 8 to 2009. That spike. So, and now we've broken out. So you've got to look at this and you've got to say leg B up in the leg A in the 5-year, leg B in the 10-year, and leg B in the 30-year. It just tells you that they're going to be higher prices, and that's one of the reasons why I feel, I can never say comfortable, but I feel that in the positions that we have, I have a reasonable comfortability in saying that we will be, we're in short positions. We might be taking profits if the stops are hit today. Very nice profits. I'm hoping that we can stay in those positions without getting taken out. Hope is not a criteria in the marketplace. You either want it or you don't want it. Hope is just a measure of emotion. So now look at this. So we're looking at yields going up. And now if you look at the UUP, it looks like a great move. But in fact, the UUP has just done enough 50% retracement from the 2294 weekly high to the 2182. And now it's bounced and stopped there. The peak E in the weekly chart of the S&P, this is the SPY actually, 169.07, pulling back. It's under a trend line right now. The week's not finished, but that's how it looks like it will close, underneath that trend line. And you've got the down channel in the TLT, this is the Lehman 20-year T-bond fund, declining and being taken out this week, but the week is not finished. So we're going to be watching this really, really closely. I'm going to move that away, and then we're going to go to callers. This is the chart of the United States, this is a South African Dow Jones stock index. So it shows you that it's very likely to pierce the 306.70 previous low. Yep, it has, 305.45. That suggests that the next level was going to be 337. That was the May low of 2010. Having made a peak F top in the Chapman wave of 426. What is a peak F top? In the Chapman wave methodology, for those of you who are new, if you are looking at you can look at bars. You don't have to look at candles. If you look at bars, doesn't matter what it is. In the obligation of the Chapman wave is to identify each successively higher peak or successively lower low bar, or trough and peak. And in that context, what you want to do is, you can see here there's a price movement. It just shows what is the Chapman wave trademark notation like. What does it do? How can it help? And in this particular instance, look, you just get a bunch of bars going up. Yeah, sure, it's going to an uptrend, and then it's going to a downtrend. What I discovered many years ago is that if you identify the most obvious left side low bar, and then you start counting each successively higher peak, it should take you to a high that is 4 peaks higher, at least, if it's a successful move to the upside. And that's peak D. I label them peak A, B, C, D on the way up. It can go even higher, but what you have to really watch for is that there are certain factors that can allow it to go even higher. Now look at this. All I need to do is put the letters in, and look how clear that is with the arrows. Up arrow for the start of it. Peak A, B, C, D, pulls back, has basically a 1, 2, 3 digestive period, starts a brand new A, B, C, D, and then it goes to E and F. Well, there's a song that says you can go to D, that's when you got to raise your stops, but suddenly it goes to E and F, bell rings so loud it can make you deaf. There are a whole bunch of things that can tell you how and why it should be pulling back at that particular point. Well, when we're looking at this, there's a peak F top in the South African Dow Jones South African index, and it looks like it's going to move to the same kind of chart pattern that we saw when we were looking at the GLD monthly chart. There's that one U, there's an arch formation, there's the second arch formation, and the failure. We'll watch to see if the South African index is going to do that. Let's go to our first caller. We've got Freeman in Dallas. Hi, Freeman. How are you?
Pastor, good morning. How's it going?
Going well. It was going well until suddenly I've got my one blank chart that says unable to request data for symbol. Please reload this chart. So I'm kind of stuck there, but it happens. Nothing serious. I can overcome that. It's just charts. What would you like to look at?
Pastor, over the weekend I was going over some charts. Then I was trying to look for Boston Scientific. Then I made a mistake. Then I got it to BXS. It's Bank South. And during the recent pullback in the markets, that thing never went down. It refused to go down. Do you think that's a good long? I just went half. I loaded. I took just half my position in options for the January 14th at 1750. What do you think about that?
This is Bancor South. Now, it's very interesting that you point that out to me, because last night I was also looking at different charts, and I came across one with the same thing. It is held beautifully. It just completely ignored what's going on in the general market. So I love when that happens, number one. Number two is, as far as I'm concerned, serendipity has an incredibly important place in the market. I couldn't tell you how many times I've hit an incorrect symbol just because of my wonderful typing. It's very easy to make a mistake. And when I do that, I always do an analysis of that chart. And very often, I suddenly am introduced to a chart that I would not have found. Sometimes it turns out to be a really important chart going forward. So in your case, you've done the same thing. Now, BSX in the monthly chart has gone peak A, B, C, D, E. But the 18.36 200 period exponential moving average resistance looks like a magnet for now, because the MACD is good. Stochastics at 89% in the monthly chart. It's trading at $17.11 right now, up 17 cents. Now, this is going to be interesting because the weekly chart has got A, B, C, D. I can call it A, or I can call it, D. I can call it E, or I can call it E/B. And what I would do with this right now, well, I think you've found something really interesting. You know, there are a couple of bank stocks that are holding really well in this environment, and my suspicion is that the next big move up in the market is going to embrace those particular stocks, and for a very good reason, because the bank stocks really have only done some recovery, but there are some areas. I'm suspecting that this is a regional bank, and the regional banks have a completely different modus operandi, and also they have a very they have been, I wouldn't say they've ignored the market because they've been in their own little orbit, because some of them have had pretty good gains and then pretty good losses on the downside. But when I'm looking at this, so I've only got this in legs C up, and then it takes a consolidation. I would not be surprised if this actually turns out to be what I call, you know, the technique and what I talk about when I say overlapping wave. There's a chance that this is going to turn into an overlapping wave. There's no other count I can get but a peak C in the daily. Then it pulls back, but it only pulls back, let's say, a little more than 2/3, and now it's trying to rally. MACD's about to cross positive. I would not be surprised if under this peak C, that's the peak C high of 18.06, there's another peak A, B, C. I call it a gray peak A, B, C, because it's underneath the previous high and an incomplete high. And then you get a D, and the D could spiral right through that 18.06 area. Now, let's just do a little bit. That's my thinking. Now let's go to the weekly chart and say, okay, all very well with this thinking business. What's going to happen? Now I always have to find the lowest low bar to start the wave count, because otherwise you'll find that you do your homework and you go back just a little bit more and you suddenly say, oh, wait a minute, I miscalculated. I want the lowest, most identifiable low bar. A, B, let's see, is that a C? Is that, oh, it does the same thing again. And there goes A. Oh, isn't that it? I love when charts do this. So I'm going to put this in for now. Yes. Oh, there's a break coming up. I'm going to give you an analysis here of the weekly chart of BXS, Bancor South. One word, Bancor South, trading at $7.07, up 13 cents. And I'll explain what I'm doing here, and I'll be right back. Basil Chapman with $3 million. We're looking at BXS. Dow's up 107, S&P's up 12. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we are back. Gave me a chance to do the analysis on on the white background chart, because I do know I get requests from subscribers and people who keep coming to Tiger, Moby. This is just fantastic technique we've got here at TFNN to be able to get to all these different charts that we all show, whether it's I do it, and then straight after me today being Tuesday, we go, Options Hour, Victor Jones, should be a great show as always. Then we've got Daryl Martin, Dave White, and we've got Tom O'Brien wrapping. Don't forget Andy Hecht, and then Tom O'Brien wraps it up. So now what we're looking at is a chart that that is one of the regional banks, and I wanted to do the monthly analysis because it's really important to be able to put into the context of chart patterns what a particular chart likes to do. Now, I'm going to put that in there. I'm showing this in. This is a very long term of this particular chart, there and there. what happened was it went to a peak G. That's a very unusual thing. It's what I call a right arm extension in this particular case, where one of the technicals carried the day to take the price up together with the 9-period moving average, and this thing goes to 2860 BXS. And then what does it do? It starts to pull back, and it pulls back in such a way that it comes down to the 200-period moving average, and then out of the blue, in July of 2008, there is just a spike to the upside. It continues in August, and September goes all the way. It must have been like a takeout candidate talk. I have no idea. 31.90 is a bank, after all. It's not a biotech. And 31.90 in September of 2008, it makes a high, and kaplop, it does the Eiffel Tower, and that's straight up and straight down, a technique that I talk about. And then it tries to rally, and it fails, and it comes back all the way from the 30s down to the single digits, 8.23, the low of October. October of 2011. So now it's gone peak ABCD. I like the chart. I think that if it can survive the next 6 weeks of market digestion, basically it has to. You've got a call now, and it goes out to when?
It's January 1750 for January 2014.
Okay, you see, I like that thinking. Let me explain why. 1580 is, I wouldn't say worst case basis, because it could take that support out. But you see the way that the gold line has been not just resistance, but it couldn't even get there ever since it broke down back in. It kept retrying to break above, and then finally it just gave up the ghost on 23.10. Back in the week of February the 5th of 2010, it just couldn't stand it. It plunges down, has one more attempt to touch the 200-period exponential moving average. It just tags it, and then the fingers, fortunately, didn't happen to Wallander, whatever his name is, who did an incredible walk across the canyon the other night. It just touches it, and the fingers slip off the rope, and at 22.55, it comes down. Now look what happens. At 8.23, it starts a brand new move, and back in September of last year, it started its first attempt to touch the 200-period moving average. Now, because this is such an important look-back period, the machinations, the way this is derived, it says that touching it is not just important, it now turns the magnets into some kind of a sine wave potential, and it's exactly what happens. It goes over it comes back, goes over it again. I would not be surprised if the range now is between $17 and $15.50 if there is real market weakness coming in over the next couple of weeks, because it really does look good. The daily says, yeah, this is a great move. If you were talking to me real short term, all I would say to you is grab every opportunity to get out of your position, take your profits, and get back in for each leg, because you don't know which leg is going to decline, because it's only a 58% in the stochastic. But the MACD is starting to try to turn positive. But looking out, it's that weekly and monthly chart that says, I think, I'm going to put it down here, BXS, looking good. And when I say looking good, I mean in your perspective, looking out. And if I'm correct in suggesting that later on this year we're going to have a fantastic rally in the market, we have this digestive period, which is really important, I suspect the bank area is going to be there, and especially the regionals. So I think you're in a great position. Thank you for pointing it out. And just as a point of note, BSX, folks, is a stock that we had bought, got a really nice profit in a couple of times, and then got out and couldn't get back in. We got a great profit, and this darn thing went all the way to 9.75, and I'd spoken about it being a turnaround situation. Dumb. Got out of it too soon. But you know what? It's still on the radar. So it's in leg C up in the monthly. So it'll be back for us. Thank you for calling, Freeman. I appreciate always a great call. And good luck with the trade.
Thank you.
We'll be going to Mark in Denver straight after this. And the Dow's up 95. S&P's up 11. I'll be right back at 877-927-6648.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, the art of timing the trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The art of timing the trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we're going to go into the Dow is up 102, S&P's at 12.80, and we're going to go to Mark in Denver. Hi Mark, how are you?
Good, how are you today?
Good, thank you.
How's your tennis team?
Tennis is actually going very nicely. I'm really pleased to say that I spent at least since last August all the way through the winter playing, but working really hard to be able to get my shoulder back into shape. And so far my service has gone back to what it used to be, and that's all you can ask for. So I'm just thankful, and I'm really enjoying it. Thank you.
Good. Yeah, it's my favorite sport. I've grown up with it, so.
Oh yeah,
Anyways.
it's a great sport because you can play it as you start to age a little bit. That's
Yeah, it hurts the joints a little bit if you play them.
oh, believe me. So you'd like to look at?
So I'm trying to do a count on troughs on the GDX, on the daily, weekly, and monthly. I'm looking to play some type of a dead cat bounce here. It's got
Okay.
What do you think?
Okay. Well, I want to talk about two things, and one is the tide. I talk about the tide, and I talk about it in terms of looking at the bigger picture, and that you have to wait for certain conditions to be met. But once you identify a change in tide, and believe me, having grown up with an incredible ocean where the Atlantic meets the Indian Ocean at the tip of Africa, I'm very much aware of waves and tides and just the different aspects, not in a scientific way, but just I have a mental picture of those waves. I don't know if you've ever surfed, but there's that double wave, the one that overlaps, that takes over, and you would think that in fact it's going to turn out to be a monster, but what very often happens with that double is that it actually dissipates some of that energy, just combining with the two. So there are ways of looking at these. Now, when I look at the downtrend that's been in place in gold, in the GLD and the GDX. The GDX, folks, is the Market Vectors Gold Miners ETF. There's a continuous pattern, just as we saw on the way up. If you remember, when we were looking at gold, constantly when everyone and their mother was talking about buying gold, because it just, every pullback saw a buy and it kept on going higher. What happened was the tide meant that if you were wrong and you bought at each particular peak, you got saved until the very last peak. That was peak D in the daily in September of 2012 at 55.25, and from that moment on, if you were long, you never got saved except for a very brief period in the daily chart, because it just kept making lower lows. That arch formation took out the left side low. And that's what I've identified. Now we're getting to a point where it's that little murky, messy stuff at the bottom where you're not sure whether the tide has changed. You're looking at the wetness in the soil on the beach, and it's saying, hey, it looks like the tide is turning, but there could still be those isolated waves. I've got that expression. In fact, I found this for another reason. I was going to talk to Freeman about it, because the stock we were looking at just a short while ago, in fact, had a rogue wave. And the rogue wave, the analogy is that the sign at the beach says high tide at noon, and at 12 or 8 p.m. you're sitting at the water's edge reading a book and relaxing when splash, suddenly you're soaked and wondering what happened. Well, the tide might have turned, but that wave didn't read the sign, and that's what you've got to be careful of on the other side, going to the downside in terms of the GDX. That big spike to the downside the other day, when it broke the left side support on the 20th, went all the way down to 24.16. Theoretically, that should have been like a rogue wave, but if you actually look at the technicals were confirming that not only was it a downside move, but it was a move that could continue. So when we're looking at that, I made it absolutely clear that if on the GLD, if the left side low bar was taken out of 123.33, even if just by 1 penny, and even if we were within 2 days of a turnaround, you've got to be careful, because the tide is still strong to the downside. You can see the width of the MACD and the GLD, or even if we go to the GDX, you'll see that the width of the MACD it's really wide, and it's saying it's going to take time and a couple of attempts to be able first to flatten out the fast-moving average of the MACD, the moving average convergence divergence, and it's going to take time for the stochastic, which is at 7.59, to even get to the teens. So I'm going to suggest, don't be in a hurry. If you're looking out, you are able to play in some way, you're able to use option calls. I think you've got a very inexpensive way of looking at it without having to look at it every hour of every day.
Right.
So now let me just do this. You asked about the wave count. The last wave count stopped at a trough E on the 20th of May at 26.24, ran up to ABC, failed, made an arch formation, took out the left side low of 26.24, and has now gone to a low today of 23.38. Now, in the context of where we've been, 2 points sounds like, oh, ho-hum, what's 2 points? Hey, I don't have to tell you. If you're in the position, 2 points is a lot. Why? Because if it was to continue down, it could very quickly go from an 8% decline to a double-digit decline, and then you're kind of stuck. You're just saying that, oh, my God, being too early, it's not a good thing to do. So I'm going to make a suggestion. I'm drawing this in so you can see exactly what I'm looking at. There's a channel, an incredible channel. This almost looks like the bond chart of 24 years, except this goes back to... This goes back, well, the top part of the channel is not exactly 100%, but the bottom part goes all the way back to the top of September of 2012. So that's an incredible support line. Within that, I'm going to punch in a channel line that I call the inside track. And that says in the area between from here to about 2184. That's another 1.5 points or more. There could be some kind of, let me put it this way. If it gets to that level, the stochastic will be even worse, and it'll have to be a V-shaped turnaround. But if we can avoid even getting to that particular level, and by, today's Tuesday, by Thursday afternoon or Friday, there's a rally that takes the GDX over the candle of the 2501 high of the 21st. That was just a couple of days ago. That was Friday. That would say, great. Now the daily can at least attempt to do something. Now we're looking at the weekly. The wave count from the peak, the top that was made. Oops, let me just get this right. This is really a fantastic chart. There was a peak D top made in December of 2010 at 64.62, and then it makes one cup formation and fails, and then it just digs a little deeper than the low of 53.46 January of 2011, and it goes to 51.10, and then it goes to a higher high. That's like an engulfing candle if you look at it on a bigger context, made a lower low and a lower high, and then it fails, and that failed at what I have to call a peak E/C minus, but it was an E. Then it goes trough A, B, C, D, has a fabulous rally because at trough D you very often get there. It goes peak A, peak B, and then fails again. So it goes from the 39 area to the 54.25 area, 55.25 area, September of 2012. And then what does it do? It comes back and it goes trough A, B, C, D. Now, I could have called that an instant restart. I probably should have, but I just went kind of strict and I went E, F, G. When I got to the G, I put G/C. That would have given me that instant restart, and I'm just going to show it right now. It's on the way down. It meets 1, 2, 3. No, that's right. It didn't meet all the criteria. It wasn't within 3 bars. It was within 4 bars. That's why I didn't do it. But in fact, it did turn out to be a new sell signal. And now I've got a leg E to the downside. So if the history of this particular chart says D's and E's, where you often get some kind of a turnaround, then we are close. But now look at the stochastic is at 14% and the MACD is just deflected lower. So it says 2 things. It says we are very close to an attempt to go to the upside, number 1. Number 2 is I have no choice but to quickly say, but wait a minute, what about the dollar? Because the dollar, in fact, is a factor here, but it's just something as peripheral, secondary, but important. And the dollar saying, I'm stuck in a trading range. I'm using the 200-period moving average at 80.31 as support. So let's go back to the GDX. This is a long way of answering, but I've had so many people ask me, if you don't mind, I'm just going to use this as an example. So now I'm going to the 120-minute chart. And you can see that in the 120-minute chart, we have just now, for the first time, started to make just slightly lower lows rather than the deep trough, just a slightly lower low. And right now is the very first time that I would say, yes, there is a chance that there could be a bounce and I can only call it a bounce, even though you would expect it's a major V-shaped turnaround. The reading I have is that there are so many sellers still in gold, and they are still open. The gold shops that I'm looking around here that opened up in 2012 and this year are still open. When I see the for sale signs, I will know we've got a major low in the. I hope it doesn't happen for their sake, but I hope it happens for our sake, because I would like a tradable move on the upside in the gold stocks, and I'll tell you why. Some of them have been pummeled, absolutely smashed. If you even take a major company like ASA, which is like is that coming? ASA, which is like a fund, a gold fund in a way. It's gone from 35. Why is it not charted? From 36.13 back in December of 2010 to $11.94. It has to be within, I would say, a point or a point and a half, 10 to 15% of some kind of tradable low. But I have to call it a tradable low because I'm expecting an arch formation. Remember, the last one took the GLD took 46 days to retest the low. I suspect we're going to get some kind of a test like that and going to make an arch formation, and that will be the trade. So now I'm going to answer your question. I'm going to make the suggestion that in the GDX, and the GDX is actually, I'm going to do this right now. XAU, I need to put this in perspective. The XAU has walked the 9-period moving average to the downside. It's been a repellent line. It's broken the left side, right side price time match by 4 weeks, but it's going back all the way to, it's broken it. It's broken the major support, the last major support, and it's done that in 4 weeks. It's broken to the downside. I'm thinking that 63.52 is not going to be hit. That's the low of October. It's going to be right in between, and we're going to have a bounce. Then we're going to come back, and somewhere between the XAU, it's at 87, somewhere between 80, I'm going to guess, between 82 and 72, somewhere in there, we're going to get a really good tradable rally. So I'm trying to put that into perspective for you, and that gives me a left side, right side price time match. I need to check where I took it from. I think I took it from a particular candle of late July, early August.
Yeah.
So that's just a long way of saying you might be able. I don't want to catch a falling knife. We used to have one of our dentists here used to sell these metal gloves for all of those who wanted to take to catch a falling knife. I miss Bob, but anyway, he used to do that. I suspect as a bounce, you're very close to having a tradable bounce. A tradable bounce. I'm only talking about a tradable bounce, meaning the GDX can go from 2360, between 2360 and 2230, to about the 2550 to 2569. Hey, that's 10-12%. Do you want to risk 10% to the downside to make 12% on the upside? And I'm saying only in a small position. Why? Because if it's successful, then that horrible gap down of the 20th of May with a high of 25.54, you'll fill partially. You'll go partially into that area. And 27.72 is the 9-period moving average. The GDX is not even held above it, gone above it, let alone held above it since the whole year, in fact. So that's a very long answer, but I think I had so many people asking me about it. I wanted to just give it to you. I hope that helps you.
That was incredibly thorough. Thanks.
Thank you very much for calling. That was Mark in Denver. We're looking at the GDX, and as a quick trade, I'd say, a little nibble here for a quick trade. I'll have to see what happens over the next few days, because dollars should pull back, but it might only be brief, and we're still on a sell. See, what's happening, folks, in the market right now, this is exactly the opposite of what we got in the bull part. Remember, every time the market pulled back, it would be so brief and it went to a new recovery high. At this particular point, every rally and every opportunity to rally is being met with sellers. And the market right now should be up 170 points from the low of yesterday into right now, and it's up 81 points. The Dow is up 10. So this is the tide has changed. at least for this particular phase. Hey, check out Steve Rhodes's the trend is your friend report on the front page of TFNN. Now let's go to Apple. I was asked about Apple in the den. I'll go to Apple. I'm going to talk about that and a couple of other things that came up. This is going to be so interesting. I'll be talking about Apple as soon as we get back. The H goes to an M. We'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, and this is something I want to just show quickly here. It has to do with Apple, so I'll go chapter 17. Chapter 17, my CD introducing the Chapman wave methodology, and we'll just scroll down here. There it is. So this is what we're looking at, the H pattern that becomes an M pattern. And what's happened in Apple, which is trading right now at 401.57, I discussed this some time ago. It didn't sound likely at the time, but at 705.07, as that candle was formed the next month, I said there's just a really good chance that we're looking at a hat-trick top in Apple. And what does a hat-trick top mean? It means that you've identified the potential for a top in the monthly chart. At the same time, the weekly chart has suggested already that it is probably already in a sell signal to sell mode, and then that is led by the daily chart, and the daily chart says, hey, I'm done, this is it, I've made my major top, and in this particular instance, it was that rally to peak E in the Chapman wave at 705.07. And so what we're looking at now is that Apple has treated that 9 period, that black line, sorry to move the chart so quickly, that black line as a repellent line. And it looks very much as if it wants to test the low of, it's already done that. The next low of importance will be 392.58, the low of the 24th of April, number one. Number two is, in the weekly chart, that H pattern, remember the chart I just showed you with those scallops to the downside, those arches, turns peak A minus, peak A minus, peak A minus, peak A minus, then it goes to peak A. Now the 200 period moving average is right there. It is at 399, and right now Apple's at 401. I'm looking at this and I'm saying, wow, the very best I can see for Apple is some kind of a bounce to, if it's lucky, it can get to the 418, 420 area, and if that succeeds, then the 9-period exponential moving average is 427. That's going to be the big test, because if Apple fails, I suspect that in a way, this is the very first opportunity it has. But if you're looking at the monthly chart, the monthly is producing those arch formations that we saw in the GLD. You come straight down and you produce what? You produce these H patterns. So I'm looking at this and I'm saying, Apple, my target was the 200 period moving average in the weekly, down at the 300 and at the time it was 394. You went down to 385. That line is now a magnet. It's not a propellant line anymore. It's a magnet for any rallies to come back to that, and there's a good chance it's going to go under it. When 400 becomes a repellent line, Apple starts to go down to the 350s. So telling me that there's bad news coming in Apple. So I want to do that for one of our dinners. Now, here's something that I want to do. You remember yesterday we were talking, we had a great call from Michael in New York, and he was talking about FNF, Fidelity National Financial. Well, the candle that was formed yesterday should be a very bullish candle. But the stochastic's only at 7%. The MACD is still trying to turn. So if FNF, Fidelity National Financial, is able to get towards the 2327 level, that's the 9-period exponential moving average, preferably you want to see 2387. That's where decisions can be made, whether to lighten up, a whole bunch of things. But at this particular point, that candle had better be really important. Now, before we wrap up, and you're going to go to the options hour, I believe it's Victor Jones today. Is it Victor? Yeah, I hope it's Victor. They all do a fabulous show. So what we're looking at is the Dow is having a pretty good rally from yesterday's low, but it's not great. The low was 14,551. In my opening call, my daily service, this is what I was explaining to my subscribers. That is very important. You want to close above yesterday's for this Chapman wave Roman candle to succeed. You've got to close decisively over 14,000, I'd say 14,800. Then you can have a rally into Thursday. But at this particular point, got to be real careful. We're watching closely, and the volatility index made a peak F-top, and it's pulling back. Thanks for being here, folks. Paul Gigante will be coming up, and thank you for being here. I'll be back tomorrow. I'll be on with Tom.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.